hit the fourth quarter now, so we start to have a lot of customers start to think about, their end of year, and they start looking at all the things they're spending money on and budgeting, and insurance is always one of those things that they start to think about. Either are they overinsured, underinsured, kind of just a normal. I think a lot of financial advisors, and David Graham from Graham Capital will probably say the same thing. That was on for us, with us before the show. But towards the end of the year, it seems like a lot of people really start to have top of mind, like, their financial household, what they're doing, looking at what they're spending, looking at their retirement, all those types of things. But insurance is always one of those things that's in there. And I know because every year my wife and I about this time start to talk about, how our year has gone and kind of our planning and things that we might want to change, and looking at our homeowners insurance or our auto insurance. So, there are a lot of people out there that start reviewing at this time of year and maybe shopping around, maybe getting another quote. What are some maybe tips that you have for people out there, with their homeowners insurance that they're thinking about doing at the end of the year in terms of that, financial review?
Well, it's a good idea from time to time to, as you just said, go back and review all of your policies. One of the things that we see pretty regularly is that, we have somebody who has been insured with the same company since they bought the house in 1994, and they basically look at the insurance as a piece of paper that they got when they purchased the house, and they haven't looked at it since 1994. But now that now they've met up with a financial planner or somebody who is trying to coach them in the right direction and give them good advice. So they pull out that piece of paper and they find out that the 2,400 square foot house that they bought back then is only insured for $65,000 because that's what they paid for back then. And in this day and age, you're going to find out, real quickly that you can't build a 2,400 square foot house for $65,000 should the worst thing happen.
Yeah.
So they're severely underinsured. So it's always a good idea from time to time to pull out those policies and look at them, especially if you've been in your house for quite some time, because things do change. They don't change every single week, every single month, but they do change from time to time, and it's good to look at them to make sure that you don't want to find out after you have a major claim that we should have thought about this, because it something's different.
Well, and I think on that same point, I mean, you look at some people's risk tolerance may change. Maybe over the past few years they've made a lot more money, and maybe they want a higher deductible, or maybe their financials are a little bit more tight and they're a little more concerned with risk and they need a lower deductible. Those are all things that they can look at, but I think on the same token, if they are going to start looking at what they're paying and questioning their cost or saving money, obviously getting a second opinion is an important piece of that. If they're out there, in a policy they've had for a long time and they haven't had another homeowners insurance carrier look at it, there's a chance that you could save them money by sitting down and looking at, they've got a couple of homes that they have insured and they've had them insured with the same company for, a few years, and maybe there's been a new company come to the market. So I think that's another piece of it, right, that people need to look at is, maybe even a second opinion, a second set of eyes on it to see, can they save money with another company that is still a good, obviously you don't want to go to a company that doesn't pay claims or has bad financials, but another good A-rated company.
Right, and that's where it comes down to having somebody that you trust, that you can talk to, because there are lots of good companies out there, but there's some kind of questionable companies out there too that I don't know that if I would want to insure my house with. But going back to the person who bought the house in 1994, back then it was very common for people to have a $100 deductible. And we still see that from time to time when we're reviewing policies for people. And we ask them, when was the last time you filed a claim? Well, I've never filed a claim. Well, then why are you paying for such a low deductible
Right. If you're not going to file a claim?
If you've never filed a claim,
And I think every person's financial house is a little bit different. But obviously, if there are some people that if they have a small minor issue, they don't file a claim. They just take care of it themselves because they look at it and they know what their deductible is. And so there are people out there, I think, in that situation that could be okay with a higher deductible. Another element of it, and again we've talked about this too, is over the past few years the coverages have changed when it comes to flood and hurricane, and obviously we've avoided a big storm. There's obviously lots of news out there that if we get hit with a big one, a lot of people would be underinsured. So if you look at your insurance, that's something to look at too. You want to pay attention to what does your coverage look like if a catastrophe happens.
Right, and where we see a lot of that, what you're referencing right there, is if you live in a condo and you have condo insurance, which basically means that you're responsible for the inside of your home, and the condo association is responsible for the outside of your home. You'd be amazed at how many condo policies we see that come across my desk that don't have any coverage for the inside of the home. The only thing that they have is a little bit of liability coverage and maybe some coverage to put you up in a hotel or an apartment for a little while. But they might only have $2,000, $3,000 to insure the inside of your home. And on those types of policies, what they're insuring is they're insuring your kitchen, your bathrooms, your flooring, the drywall, the electrical, all of those things on the inside of your house. But people don't really understand those type of policies, so they buy an inexpensive policy because it offers them the best price, not realizing that if a hurricane were to come through and damage their house that sits on the 10th floor on Clearwater Beach,